Hello, it's Friday, September the 9th. I'm Hwang Jie, and this is Business Daily live from Seoul. Here are some of the stories we have lined up for today. North Korea's fifth nuclear test, coupled with disappointment from the ECB meeting overnight, rattled markets. Seoul's top economic policymaker pledges to closely monitor all signs of financial volatility. As expected, the BOK holds its key interest rate steady as it awaits the Fed's next move while keeping close tabs on ballooning household debt levels. North Korea shocked the world once again, conducting its fifth nuclear test this morning. Financial officials in Seoul came together to evaluate the potential risks the event poses on the local economy. South Korean shares, in fact, had a rough day, staying on a downward streak. For more, we connect to our Kim Min-ji. Min-ji, first tell us how markets closed.
South Korean shares were in for a hit, posting sharp losses on Friday. The benchmark Kospi lost 1.25% to close at over 2037. At one point in trading, shares also touched the lower 2030 level. The tech-heavy Kosdaq, meanwhile, closed down 0.36% to just below 665. But the general consensus among market analysts is that the impact of North Korea's nuclear test will be limited, as was seen in the past, although it may take a toll on investor sentiment in the short run. Now, just to put things in context, after the North's fourth nuclear test, the Kospi shed only 0.3%, and movements were similar at similar levels during the second and third as well. So the slide seen today is set to tie in with negative sentiment following the European Central Bank's decision to keep its monetary policy on hold without further expansion, and a possible rate hike in the U.S. that may come as soon as this month. Now, meanwhile, the Korean won weakened against the U.S. dollar, trading at over 1,098 won against the greenback, down 5.8 won from the previous close.
So, Min-ji, it was a combination of uncertainties that dragged down local shares. Still, an emergency meeting was convened to assess the situation over in North Korea. What was the outcome there?
Yes, you're right. Just about 2 hours ago, the Finance Ministry convened an emergency meeting with officials from related government agencies to discuss the situation and review necessary measures. They said, as seen in the past, believe that the test will have a limited impact on the financial market as well as the overall economy. However, they said they aren't ruling out the possibility of increased market volatility as global uncertainties, including a possible U.S. rate hike and impact from Brexit, still linger. The Vice Finance Minister who chaired the meeting said the government will operate an interagency team to monitor local and overseas markets and the real economy around the clock. He added swift action will be taken if deemed necessary. This has been Kim Min-ji reporting from Korea Exchange.
And over at Korea's central bank that froze its key interest rate at a record low. Despite the feeble performance at home, the mounting household debt is a sticking point, making it hard for the BOK to move any lower. Lee Ju-young reports.
The Bank of Korea left its key interest rate unchanged at a record low of 1.25%. This marks the third straight month the central bank has kept its rate steady, following a surprise cut in June.
There are a lot of uncertainties, but we expect the Korean economy to maintain a modest recovery on the back of expansionary policies. We decided to hold the rate, keeping in mind the rapid increase in household debt and the possibility of a Fed rate hike within the year.
There has been speculation that a rate hike might be on the horizon in the U.S. after Fed Chair Janet Yellen said that the case for tightening has strengthened in recent months. This raises concerns for emerging markets, including Korea, as it could trigger a capital outflow. A further cut in the key rate could also exacerbate Korea's already soaring household debt, which hit a record high $1.1 trillion at the end of June. On top of that, growth remains sluggish, sitting in the 0% range for 3 straight quarters. And there are concerns about a fall in consumption after a temporary tax benefit scheme came to an end. But analysts do see room for more easing toward the end of the year after the BOK gauges the impact of the government's recent $10 billion supplementary budget, as well as the fallout from the ongoing corporate restructuring drive. Lee Ju-young, Business Daily.
The European Central Bank left interest rates unchanged at nearly 0% as growth and inflation remained sluggish, but failed to extend the deadline of its asset purchasing program, surprising markets. The UK's decision to leave the EU has so far had little impact on the economy, but the bank expects the rates to remain at present levels or even go lower in the coming months. The ECB decided to continue buying roughly $90 billion worth of assets every month under its quantitative easing program until March next year. Interest rates have been at a record low since March when ECB lowered borrowing costs, expanded its QE program, and cut its bank deposit rate further into negative territory. Over in Laos, the participating countries of the proposed mega trade deal called the Regional Comprehensive Economic Partnership, or RCEP, have agreed to speed up the negotiating process. The negotiations involve the 10 ASEAN members and the 6 states with which ASEAN has existing FTAs: Australia, China, India, Japan, South Korea, and New Zealand. The 16 states account for half of the world's population and a third of global GDP. Leaders called for a swift conclusion to the negotiations as they hope to reach an agreement this year, but will likely miss that goal. RCEP is often compared to the Trans-Pacific Partnership Trade Agreement, which includes the U.S. but excludes India and China. It's been 8 days since the world's 7th largest shipper, Hanjin, filed for court receivership and the first supplementary vessel offered by competitor. Hyundai Merchant Marine takes off from the southern port city of Busan to lend some help. Shin Se-min has more.
A ship belonging to Hyundai Merchant Marine, Korea's number 2 shipping company, sails from Busan late Friday evening to help ease the logistics crisis caused by Hanjin Shipping, whose vessels are stranded in ports around the world. The Hyundai Merchant vessel will sail to Los Angeles after stopping over in Gwangyang, Jeollanam-do province. Hyundai Merchant says more than half of the ship's cargo is from 2 of the world's leading electronic makers, Samsung and LG Electronics. Hanjin's slide into court receivership has put 11,000 jobs at risk at the world's 5th busiest port of Busan, not to mention the impact rippling through the global supply chain as it holds up deliveries around the world. Industry sources say Hanjin's main creditor, the state-run Korea Development Bank, is unlikely to extend more credit to the shipper without collateral from its parent, Hanjin Group. Previously, a local court had asked the creditors to lend Hanjin more money to pay its outstanding bills so its cargo can be delivered. But even a $90 million pledge from Hanjin Shipping's parent wasn't enough to convince lenders, who said the figure was far from enough to contain disruptions to the global supply chain. In the midst of all this, Korea's top economic policymaker Yoo Bil-ho spoke at a 2-day parliamentary hearing on the nation's ailing shipbuilding and shipping firms. He said the government will try to minimize the fallout from the Hanjin incident and added, despite the ongoing restructuring in the shipbuilding industry, it'll work to ensure the country doesn't lose its key workers to competing countries like China. Shin Se-min, Business Daily.
Korea has ordered a recall of more than 24 furniture models sold in the country. The Korean Agency for Technology and Standards investigated drawers from 11 best-selling furniture brands in the country and found that 7 of the companies fell short of safety standards. The agency said Friday that it has asked for recalls last week of 27 products from the firms. More than half of them were made by Swedish IKEA, including the model that caused deaths of 6 children in the United States after drawers fell on top of them. If the companies refuse to recall their products, they will have to face fines of up to roughly $27,000 or a maximum prison sentence of 3 years. It's Friday, and that means it's time for a look through some notable global news topics. And for that, we are joined by our Eunice Kim in the studio. Eunice, so New smartphone releases have grabbed headlines in recent weeks, and the iPhone 7 was unveiled last Wednesday, local time in San Francisco. Apple CEO Tim Cook has called it the best iPhone ever, but investors aren't as impressed, I guess.
Right. So we saw Apple shares rise slightly following that announcement, but we are actually seeing share prices dip now. Shares currently lower than when the work week started on Tuesday in the States on the heels of Labor Day holiday. And as you can see here, the rally ahead of Wednesday's launch translated into a 49-cent rise as of the end of the trading day when Apple unveiled its new iPhone 7s in San Francisco. Now, on Thursday, prices in fact dropped even lower to 2.6% to just above $105. That marked its largest daily percentage decline since the Brexit vote back in June. And it was significant enough to drag down with it the tech-heavy NASDAQ, breaking a 4-day streak of gains. This also comes after Apple said it would not release its first weekend sales figures for the iPhone 7, which is often, of course, used as a benchmark to gauge the popularity of a new product.
Now, ahead of this week's release, market watchers said that Samsung had given rival Apple rather a gift to its rival company with its global recall of its latest Galaxy S7.
Right. The Note 7. But, if we're looking at investor confidence, it seems like that may not necessarily be the case because Samsung Electronics, on the other hand, did see its shares rise this week as consumers were impressed by its swift response in its global recall and replacement program that one Bloomberg estimate puts at a cost of about $1 billion. Now, Samsung simply said it would be a heartbreaking amount, and 2.5 million Note 7s had already been shipped in those first 2 weeks. Reports of exploding phones, which Samsung has since identified as a battery issue, continue around the world, and we are hearing from the U.S. authorities at the Federal Aviation Administration warning that Note 7 users should not switch on or charge their new handsets while on a plane. They also advised against leaving a Note 7 in checked luggage. Australia's Qantas and Virgin Australia Airlines also issuing similar warnings. Meanwhile, back here in Korea, its transportation ministry, which had considered banning the Note 7 on board today, said there would be no such warnings for now after an evaluative meeting with Samsung personnel, though they did say their monitoring will continue. Now, on the back of these latest developments, Samsung Electronics shares did see a dip in Friday, today's trading day, ending at 1,575,000 won, down nearly 4% after rallying earlier on in the week.
And of course, Apple is dealing with the European Commission's ruling that it owes Ireland an additional $14.5 billion in unpaid taxes, a ruling that Ireland has dismissed. But before we let you go, let's talk about the handsets themselves a bit. How does the new iPhone compare to their Android counterparts?
Sure. So we took the liberty of creating a chart to kind of pit the Apples against the Androids in a side-by-side comparison for the two iPhone 7 handsets that Apple released this week versus Samsung's S7 Edge and the Galaxy Note 7, as well as LG's V20, which was also unveiled this week. Apple, of course, had played up its two-camera system for sharper, crisper pictures, available for now only on its iPhone 7 Plus. It's also caught up to Samsung in making its handsets water resistant. And perhaps the most controversial choice of all is getting rid of that headphone jack, true to rumors leading up to this week to introduce its wireless earbuds called the AirPods, available for an extra $159. Though if you still want to use your wired earbuds, you can do so for now with the provided adapter. Apple also hyping up its storage, starting at 32 gigabytes. But in terms of resolution and battery life, Apple still has a ways to go to catch up to its Korean counterparts.
Now, all this comes as Samsung and Apple are working to keep their global leads amid a crowded and saturated smartphone market with the fierce competition coming from China.
Yeah, absolutely. So just to note, Gartner last month did release some new figures about the global market share for Androids, having expanded to 86.2% in the second quarter, with overall shipments of smartphones growing 4.3%. So we are seeing slight edging up there. But Apple's market share had fallen by 7.7 percentage points year over year, logging a 26% decline in China and mature Asia Pacific regions. So certainly they're going to need some pulling up there.
Right. All right. Thank you so much for your time today, Eunice.
You bet.
And that's it of this edition of Business Daily. Thanks for joining us. We'll be back on Monday, same time. Goodbye for now.